first. I'm very, very proud to be the founder and CEO of Tax Prep Advocates. We are very, very focused on helping companies lay their hands on money that they oftentimes didn't even know that was available to them. So I'm really proud of this. You know, I have personally interviewed at least 100 certified public accountants in the last year. And of all of those interviews and conversations that I've had with CPAs, I have met one or two that actually know how to do what we're going to talk about tonight, which is qualifying for R&D tax credits. When I'm done speaking, I'm going to introduce you to my wingman. His name's Jonathan Roth. He's a vice president with Tax Prep Advocates, and I'll save his introduction for just a couple of minutes. So tonight we're going to just give you a little bit about the background, where this thing came from, how do you qualify for it, who the ideal candidates are. We're going to really hit some case studies and knock your socks off with what we've been able to do for businesses. And then we're going to tell you a little bit about the performance-based fee structure that we have. You know, the history of this thing goes all the way back to Ronald Reagan. 1981 was when the very first time that an R&D, research and development tax credit, which could be the form of cash in the form of a check from the United States Treasury made payable to your business, or could be a credit that you get to use to offset future taxes for upwards to 20 years. So it's one of the most powerful things that any business could put on their balance sheet. So, you know, looking at this credit, it was originally instituted as being temporary or, you know, to be renewable with each administration. In 2015, something really big happened, which is called the PATH Act. And the PATH Act is what made R&D tax credits a permanent fixture inside our tax code. And to fast forward a little bit more, in 2025, when President Trump signed the One Big Beautiful Bill, there's a massive series of provisions available for businesses. And that's really what we're going to dive in today, because in this year, 4th of July, on Independence Day, it radically overturned the previous administration's policies. Those policies required companies to expense their what we call QREs, which we'll talk about in a minute. A QRE is a qualified research expense.
Recording in progress.
In the previous administration, those QREs were required to spread over a 6-year period. But the One Big Beautiful Bill gave us full expensing and gave us the retroactive ability to go backwards 3 years to qualify for R&D. Let's go on to the next slide. So first and foremost, do you qualify, right? So there's no way to tell for sure on this simple webinar. We're going to offer you an opportunity to meet with our R&D onboarders. At the end of this, there's no cost for a one-on-one consultation, and we're going to take you directly through a qualification process. But I'll tell you, the people or the companies that are ideal candidates for this are ones that pay a lot of money in income taxes to the state and federal governments. And so the other qualifications are about manufacturing or making something or even improving something in your business. We have found in today's modern era of AI and technology and CRMs that just about every company is involved in one way or another, involved in software, tons of manufacturing, architecture, agriculture, engineering, food or beverage, construction could be eligible for this credit. And here's a really big one that I've honestly never even met a CPA that knew this, which is number 4. It says, are you making the same product the same way? Check this out. Did you know your product or even your process? It doesn't even have to be new to the industry, just brand new to your company. And so businesses rarely make their products the exact same way year after year. So if your business is conducting any form of research to make your products or your process or processes cleaner, greener, quicker, cheaper, you could qualify for the credit. The IRS has put forth a four-part qualification test. Now, we are absolute experts in our business, helping businesses identify how to pass the IRS test. Let's just go through exactly what they are. Number one is permitted purpose. Number two is technological in nature. Number three is elimination of uncertainty. And number four is process of experimentation. Now, I already know what you're thinking. You're like, oh, that doesn't sound familiar to me. I probably don't qualify. Well, you're about to be surprised. So let's look at permitted purpose. So does your business develop or improve any kind of a product, a manufacturing process, any kind of software, technique, formula, invention, performance, reliability, or quality? And the answer is, yeah, they do. You guys, I've even seen Mexican food restaurants qualify for this because they learn to make their carne asada burritos a little bit different. And that process alone met the permitted purpose qualification. Number two, technological in nature. Now, it says you have to use science in one way or the other, whether that's physical sciences, computer sciences, chemistry, biological sciences, or engineering. And so, you know who I've talked to a lot? Farmers all across America. I've talked to winemakers, brewers, construction companies, and they all say the same thing. I don't have that kind of a business. Like, what? Are you kidding me? And so farmers, for example, they don't even realize the fact that they're trying different herbicides, pesticides, irrigation techniques. The grape growers, they're using different types of products to be able to keep bugs and birds off their grapes by covering their harvest in their, what is it called? Their vineyards. I forgot the word vineyard. And so those are the types of things that are all technological in nature. And then if we look at elimination of uncertainty, your expenses have to be intended to discover information or to eliminate some form of technological uncertainty concerning the capability or method for developing or improving a product or a process or a design. Now, I want to draw your eyes to that one word in the bottom left corner that says process. Process is key. And so there's so many businesses that think, again, they don't qualify because they're, not necessarily manufacturing something or really trying to make new jigs or formulas, that kind of stuff. But the process of the way they go about what they do oftentimes is a huge benefit when it comes to identifying the elimination of certainty, and will help your business go through this four-part test. And then lastly, bottom right corner, it says process of experimentation. All of the activities must be elements of a process of experimentation via modeling, simulation, systematic trial, error testing, or other methods by evaluating one or more alternatives, also known as the elimination of I was trying to think of the words of trial and error. Trial and error is also another process of experimentation that a lot of companies qualify for. So let's go on. QREs. QREs are defined as qualified research expenditures, right? Expenses. And so what we're looking for are the way businesses spend money. And they spend money through salaries, wages, contractor costs, supplies, materials, and even computing and development and cloud. And that is a huge, huge expense for a lot of businesses. I find the contractor costs to be amazing because 65% of subcontractor costs provided that you retain the rights and the risk, right, and the cost bearing of your contractors are considered QREs, qualified research expenses. And then supplies and materials, and that's whether they're even used or destroyed during any kind of qualifying activity, can also be included in the equipment manufacturing. So what I'm trying to tell you is that there's a lot of accounting and legal definitions, and we are experts in helping you identify specifically which components of your business we can fit into the qualified R&D box. By doing so, there's a lot of money on the table. Let's go on. I'm going to show you some examples here in a second. Now, I put this slide together as a memory jogger for you because we do these kind of Zooms, and I thank you so much, Queen Helene, for spearheading our research and development nationwide awareness Zooms that we host on a regular basis, because we have found that most entrepreneurs are friends with other entrepreneurs. I know I am. I own a business or several, and most of my buddies own their own businesses also. And so I'm put this list up here to show you like the top 30 industries that are kind of no-brainers when it comes to qualifying. So think about this for yourself, and think about this for friends that that could also be excellent candidates for research and development tax credits, particularly in agriculture, software development, manufacturing, anything having to do with software, pharma, medical devices, any kind of machine building, oil and gas, computer electronics, aerospace, chemical, semiconductor, tool and die, consumer products, breweries, wineries, heavy equipment, construction, plastics and rubber manufacturing, metals processing, fabrication, food and beverage, automotive, furniture, video game developers, health and beauty, architecture, any kind of engineering firms, technology integrators, even blockchain, you guys. And so I promise you, you got 10 friends that are on this list. So spread the word is the point. Let's go on to the next slide, and I'll show you some exciting things. First of all, who is this ideal for? Well, it's for businesses, not individuals. And do you have to have employees to qualify? No, you don't. Having employees is not a 100% determinant like previously in the COVID era, when lots of companies applied for employee retention tax credits. That was all based upon the total number of employees. This is not employee driven. This is QRE driven, and this is driven by companies passing the IRS's 4-part test. And so we have an amazing, it's kind of a do-it-yourself with guidance and hand-holding experience with unlimited technological support. So us and our partners have invested millions of dollars into a software platform in order to help companies qualify. And we have a team of not only R&D onboarders that can discuss the qualification, but open up our portal to help you assemble information. Now, here's a really important piece that you need to know. You don't need to upload one single document in this process. There's no paper, there's no tax returns, there's no paychecks or payroll runs that you have to upload, but there's some fill in the blank boxes when it comes to your expenses. And through this process, we develop an amazingly comprehensive study report that actually has all your QRE allocations, the breakdowns, and the individual activities for employees or the principals to show exactly what activities they perform in order to maximize the R&D credit. Now, we include all of the work papers, and we produce 100% of the federal and state draft forms to be filed by your CPA. So we'll do 100% of the work for your CPA, and we 100% defend our work. We stand behind absolutely everything that we do, so you don't have to have any anxiety going forward in this process. So the next slide will show some real life examples of some of the over 1,800 companies that Tax Prep Advocates has helped. This is a really big deal. And I want you to not only look at what kind of an industry they are, but read the words right below this. So in the top left corner, it says agriculture and research. So their federal and state tax credits just for one single year, $2.75 million. By the way, all of that came in the form of a check. The next one, again, architecture and engineering, 270,000 in federal only. The next one is the average annual tax credit of a construction company of over $400,000 every single year. The next one, it shows combined annual and state R&D tax credit. So we're going to talk about the states in a minute because man, that is a wild can of worms. And we're going to show you how our expertise is going to really assist you in producing a state compliant R&D tax credit also. And some of these states, you guys, are very, very aggressive. You know, the whole point of this thing is to give American companies competitive advantages to compete on the international market, particularly with China. Which is, you know, this current administration's big, you know, hot button focus. So he's doing everything he can in order to help businesses thrive in America. And so if you look at, you know, in the second row, wineries, financial services, this is food and beverage company, life sciences, manufacturing and distribution, breweries and distilleries. And by the way, this is like your local brewery. I promise you, like most of your friends, probably 40 to 60% of your friends that just are members of your local chamber of commerce, these are all guys and gals that own businesses that could really use the money, particularly in farming in America. Those are some of the hardest hit industries. And I'm telling you that these dollars that we're bringing to the table absolutely make a winning difference. So I'm just here to show you that we're experts at what we do. And next slide, please. And my goal right now is to do a little bit of a deeper dive into some real live case studies and to introduce you to our good friend, Jonathan Roth. He comes to us with over 30 years of experience. He's going to tell you exactly how to qualify both federally and by each of the states. You're not going to go through all 36 states that offer the credit, but he'll show you generally how it happens. We're also going to not take questions on this Zoom because we're going to cover the most frequently asked questions here and now. And by the way, we're hoping when it's all over that you have one question, which is, do I qualify? I'm going to make it two questions. Do I qualify and how much am I going to get? And those are the questions that we want you to ask. And we're going to offer up, and we've got some cool technology on the way we're doing this. When Jonathan is done speaking, our Chief Technology Officer, Jeremy Miner, and Jeremy, you can come on and just wave so they know who you are. There he is. His face is popping up. Jeremy's my wingman. He's our Chief Technology Officer. So as soon as Jonathan is done, Jonathan's going to wave the magic wand and he's going to say, now, Jeremy. And here's what's going to happen. Every single attendee on this call is going to get a text and or an email with a link, which is actually goes straight to our FAQ page, our frequently asked question page. And it's got some really good explainer videos on there. And I'll tell you who the number1 video is from, Senator Chuck Grassley. Now, he's been a Republican senator for, I think, 275 years. He's an old guy. He's been in the Senate forever. But we got a recorded video of him on there basically saying, hey, you SMEs, small to medium-sized enterprises, get off your butt, because 85% of the money that is claimed by the big businesses, right? SpaceX, they're getting their unfair share. FedEx, Nike, Amazon, they are getting their unfair share. And we are, and this is why we're called tax prep advocates, because we advocate for small to medium-sized enterprises all across America. Jonathan's going to do a deep dive into the actual deliverable and the work that we'll do for you. Again, there's no out-of-pocket expense up front to determine qualification and how much. We're going to show you our approach. Do we work for free? No, we don't. We do basically a success formula, and we ask for a small percentage of what you get back from the state and Fed, and then he's going to address the rest of your concerns. So Jonathan is a very close friend of mine. He lives in Carlsbad, California. He's got a beautiful, beautiful family. He's been married forever. His wife is a doll. He's a super smart guy. I'm going to turn our time over to my good friend, Mr. Jonathan Roth. Take it away, my pal.
All right. Thank you very much, Kent. We're going to jump right in and we're going to talk a little bit about case studies that these are actual examples of businesses that we have helped. We helped a fertilizer company based in Missouri. Missouri is one of the states that unfortunately does not provide federal tax credit. Well, actually, I'm sorry, state tax credit. Actually, this one did. I'm sorry. I messed that one up. We have a state credit and a federal tax credit on this one. They had a total employees of 45, and we were able to total up their QREs or qualified research expenses of $5.2 million. What you can see here is the average number for federal R&D tax credit is somewhere around 8 to 10% when you add up all of the QREs that Kent went through. This is another example, a Nebraska farm with three separate locations owned by one family. Not a lot of employees, but significant amount in qualified research expenses to the tune of $6.2 million in one year. In that year alone, we were able to get them nearly $1 million. And then another year in 2021, they had $11.5 million in QREs, of which we were able to get them almost $2.7 million. So there's a tremendous amount of money there for agriculture, as you can see. The last one is a personal friend of mine. This is a pre-revenue startup. What's unique about pre-revenue startups is they're not paying any income tax. However, we can take their R&D tax credits and apply them to payroll taxes, which is what they did with these tax credits that we got them. Again, because they're pre-revenue, it's an AI company that has developed avatars that sit in different locations where you can talk to an avatar that answers your questions about that retailer or restaurant. And the technology that they used to create this is pretty unique, but it all came in the form of expenses through payroll. And those total expenses in that year were $566,000. And as you see, we got them a combined federal and state of 66, almost $67,000. So here's the states that participate. What's unique is every state has got its own set of rules on how they participate with R&D. But the good news is 36 states and Puerto Rico all have some form of R&D. So when we do your federal, then we go back and then we do your state and we deliver a combined report to you that has not only your form to fill in to send to the IRS, but also your state form as well as a significant backup, which I'll talk about in a second. Some of the big states that unfortunately don't do a reciprocal R&D are Nevada, Arkansas, North Carolina, Tennessee, and the Northwest, with Washington and Oregon, unfortunately. But there's a substantial amount in states like California where you can get an almost identical amount to the amount that we would get you in federal. I'm going to go through a couple of FAQs, and this is one I kind of touched on with the pre-revenue startup. But if I'm a startup and I'm not profitable, am I still eligible for R&D? Absolutely, you can. We can get you money as long as you're less than 5 years old and you have not done more than $5 million in gross revenue in any of those years. We didn't really talk about it too much, but when we start with you right now, we're finishing up 2025 and we'll be able to do those. Let's just say we were going to do your credits in January and you've just finished the year. We have the opportunity to do January 2025 R&D tax credits. Then when that's all done, we can go and get 2024 R&D tax credits. Then when that's done, we can get 2023 tax credits. And lastly, we can go back as far as 2022 and get tax credits for 2022 up until April of 2026, 3 years after that point, or depending if you filed for an extension for your business, which those deadlines for an extension would be September or October, depending on whether you're an S Corp or a C Corp or an LLC. That would be in September versus October for a C Corp. So you have that opportunity to go back and grab R&D tax credits from 2022. Once that closes, that's done and gone forever. That's a tremendous opportunity. Now, when you look at grabbing 2025, you're literally getting 4 years in a row that we can get for you, and that can be a substantial amount of money. Okay, the next FAQ. Why hasn't my CPA told me about the R&D tax credit? Well, this comes up a lot. CPAs aren't expected to know everything about R&D, but they know about taxes. So a lot of times we get referrals from CPA firms to do their R&D tax credits. R&D is a very specific and specialized area. And the CPA really all they need to do once we've done your R&D tax credit is file. If it's an amended return, they would file an amended tax return for you and send in the forms 6765 for federal and the state form for you, along with a copy of the backup that we give you. And that's really their role. To get into R&D, you also have to realize that for years and years, this R&D tax credit was only taken by the biggest companies in America who have a team of their own CPAs and their own tax attorneys working on staff just to make sure that they maximize their R&D tax credits and pay very little in income tax for the business. Well, this program that we have that we partnered with, this multi-million dollar software that you work with, makes it available now for small businesses to get these same R&D tax credits. And when you watch the video from Chuck Grassley that Ken referred to, you're going to see Chuck Grassley basically says that small business is the means of innovation and is the engine that drives America. And he encourages at this small business conference small businesses to take advantage of these programs like R&D tax credits that he mentioned specifically that are there for their benefit just as much as it is for big business. Can I recover taxes paid years later, and how many years later do they carry over? I just told you we can go back 3 years, and in January, in essence, get 4 years. But what's even better is if we get you a substantial amount in R&D tax credits, and let's say you can't use them all. Let's say, as an example, we got you $100,000 and you only paid taxes of $50,000 in that year. You have a $50,000 carryover. That goes on your balance sheet as an asset, and you can carry that out 20 years. Why is that important? That's important because again, it's an asset, but if you were to sell your business and you had a substantial amount of tax credits, for example, those would be on your balance sheet. And if you're selling the complete business and the EIN, that those tax credits go with the EIN and again are an asset that you're selling along with your business, which potentially could increase the price of the sale of the business. The next FAQ is what happens if I get audited? That's a big one. Well, fortunately for us, that hasn't happened yet. And we've been doing it for quite a while. As you saw, we've had 1,800 businesses that we've helped. But what's important for you to know is that we do provide an audit defense for you. And we pretty much guarantee our work and will back the dollars for you. Um, So that should not be a concern of yours going forward. Here's our deliverable. When we're all done and you've entered in all the information and you have your R&D tax report that we will review with you, it is somewhere in the neighborhood of 30 to 60 pages with detailed backup of how you qualify for research and development tax credits. In addition, we give you the Form 6765, as I mentioned earlier, for your accountant to send in to the IRS, and any necessary state forms with very specific, detailed instructions on how to file them with the IRS and the state. Oops. So our approach, the first thing we do is you schedule a meeting with one of our onboarders and we check your eligibility and make sure that you're eligible for R&D tax credits. Then we get you into our software where you input the data and we guide you through that process. There's a little bit of give and take after all that's said and done, where, sometimes some questions come back from our experts as to specific questions with maybe percentages that you put in for one of your employees, or maybe a description, a job description. We get into a lot of the minutia and questions and make sure that we're protecting you to make sure you have the best possible R&D tax study. And then when it's done, we schedule a call and we go through the tax study with you, all 60 pages approximately. There is nothing for you to pay up front. At the end, we require a 20% fee. It's an 80-20 split. So again, in that example of getting you, for round number's sake, $100,000, that would be $20,000 to us, and you're in the positive $80,000, and that fee that you paid us is tax deductible on your next year's taxes. If for whatever reason cash flow was tight in your business, we do offer an opportunity for you to do a payment plan and spread that fee over 12 months, with 25%, an increase of 5% and 1% interest per month carried over. So why move forward with tax prep advocates? Potentially, we could get you thousands of dollars in R&D tax credits. There is zero risk for you. You only pay if we find you a benefit, and we offer unlimited audit support as well as a calculation guarantee, and we carry over $1 million in E&O for your protection. The next step is to bring Jeremy on so that I can wave my magic wand and he can go forward.
Fantastic. Thank you, Jonathan. All right, everybody. So what I'm going to do right now is send off an email to everybody. This is to the email that you used to register for this event. And what I'll do is when I send that off, go ahead and check your inbox and you will find the email coming through. Now, I tested this over and over again just to make sure that we were compliant with all spam regulations, and I got a 10 out of 10 about how good it was from all the spam testers. Nevertheless, there's always a chance that it could end up in your spam folder. So just to make absolute sure, when we send this off to you, I'd like you to double check just your spam folder. So I am sending it right now. This is going to everybody based on the email that you registered for this event on. Okay, I sent it off. It should take about 1 to 2 minutes, maybe 3, but I'm showing a processing right now. It's 74% already, and I'm getting some test or the email to the test accounts that I registered myself. So we're really excited for you to participate in this. As the email says, and as we said before, don't count yourself out. You really should consider whether you're eligible after you've talked to an expert. Who is the expert? We have Jonathan Roth, who you just heard from, and we have a couple of other excellent account executives who will walk you through the process. There's no charge to find out whether you qualify, and it's all upside if you do qualify, and there's no downside if you don't. So go ahead and use that link to register, book an appointment. The calendar is available right now, and we'll see you online. So now we've seen a few hands go up for Q&A. This is a webinar, so we can't answer your questions particularly. We'd much rather answer your particular questions on a call. So once again, go find that email. It's a link in your inbox, and you can register right there, and then we'll be able to answer all of your questions. All right, everybody, thanks for joining us this Thursday evening, and we'll see you on the call. Kent?
I just wanted to say thank you for your attendance. I'm very excited that you all are here. It was a very good session. We packed a lot into a very short period of time. And again, I'm just confirming, Jeremy, that everything worked perfectly on my side. I just got my email. So just look at your inbox, and you can just very simply click that button and schedule a Zoom with one of our onboarders. So thank you so much.